So, Philip, once again, thank you for your time. I know we've been coming here with several people right now, and I noticed that the questions kind of similar.
Hmm.
So, the productivity of today is to answer those valid questions to save your time in the future and be productive to those who are future clients of yours. If you don't mind, we can start with those that are at this point a potential tourist or a tourist in Canada. And I'm going to ask the taboo question about showing the funds when you come to Canada. So if you bring more than 10,000 Canadian dollars per family, you have to declare it. So every single tourist client is asking the question, what is the procedure is like? What do they have to show as a proof of these funds? And if the immigration happens down the road for this family, is it visible somewhere in the system what they brought? Is it hits any taxation in the future?
So basically, I think you just have to make sure that whoever's arriving in Canada, and this is more of a customs question, declares makes a declaration if they're bringing more than $10,000 Canadian in cash per family in a given visit. I think it doesn't affect their tax filings or any issues with taxation down the road, but it does. It should be a matter of just making the declaration, so that there's no issues with the customs and immigration authorities upon arrival. As far as like moving money down the road past the arrival date, that's already beyond the scope of the 10,000. But this is only basically like when you're arriving at the airport, you have to make that just remember to make that declaration, so that if there's questions being asked by customs, that they are addressed, and that there's no issues upon arrival on that front. But again, with respect to the CRA or the Canada Revenue Agency, there should be no issues with that.
Nothing to do with taxes.
Nothing to do with
It's just
taxes.
basically customs. And the proofs that you can show is basically either your saving accounts or your sale
No,
of the
this
property.
is just purely money that you bring in with you on your flight and in your carry-ons and checked luggage. This is nothing to do with money abroad or money that is already in a Canadian bank account, but purely just money on you upon arrival that you brought in on your flight. Or if you're bringing a container or anything like that, when there's some monetary value there, that's being declared once the container arrives.
So similar to that.
Yeah.
So next thing, and this is probably a good question for me as well. So whenever a tourist comes here, and I know before, a couple of years before, they could collect receipts for paying GST, HST everywhere they go, and then they could claim it back. Now that story is done. I know it's impossible to do it, but every client is asking me the difference between taxes and GST and HST. And I don't have the professional answer. In theory, I understand the difference, but when to give them a valid answer, I'm getting lost. So if you can help.
Yeah, to my knowledge, I think that's a valid point. That I don't know that the government anymore gives out refunds for GST, HST spent in Canada. But again, this is our Canadian VAT, or value-added tax, much like in Europe, in other countries. It's just like a sales tax here in Canada, and it's something that I guess tourists have to get accustomed to, because oftentimes, like in other countries, when goods or services are advertised, they are already advertised like gross of the VAT tax. But in Canada, we have a propensity to advertise net of the VAT tax, and so typically would add that tax on top of the price of the good or service, and so so tourists should not be surprised when they end up actually making a payment, that it ends up being a little bit more than what the price tag would be on that service or product, and it's in Ontario currently 13%.
But do you have a theory how come some countries, they have the tax included already in the price. So if you see $1, it's $1.
Yeah,
For
it's just a
us-
convention. It's basically just like a convention that Canadians have gotten accustomed to. It doesn't have anything unique to, I would say.
Nothing to worry
And,
about.
yeah,
or-
nothing special that would be something of concern. It's just the way we handle our retail or the way the Canadians run their retail operations has always been net of this tax. And again, this tax would be different in different provinces. So perhaps because it's not a unified rate across Canada, we are used to advertising our rates net of the tax. So if you're living in BC and you're subject to
Oh, we could
5%,
get to that, yeah.
you only pay 5% on top. If you're living in Ontario, then it's 13%. And again, Quebec also has QST. So each province has its unique set of taxes. So because we're not it's not a homogeneous tax across all the provinces, I think that could lead to one of the reasons for why Canadians are advertising their prices of goods and services.
But we have products like, and correct me if I'm wrong, bread, milk, water, gas, that don't have GST, HST on it, right?
Correct. Certain staples don't have GST, HST on them up to a certain amount, and so there's certain rules around it, and sometimes that would be the case when you're going to the, and this is something that could be also researched online, but there are certain goods that would where HST would not necessarily apply up to a certain amount and up to certain, let's say, size of product. And then also in Canada, there's goods that we exempt from HST, GST, HST, or Canadian VAT. Mainly, financial services, medical services. So certain services do not attract. I think educational services as well. Mm-hmm. So these type of services would not have HST or GST, HST apply.
Is that because they consider it as a mandatory things that shouldn't get GST? Like, what's the theory behind it?
Behind this?
Who structured this and why?
Well, there's certain rules around GST, HST. So certain goods and services will be subject to GST, HST. They would be called taxable supplies. Certain services would be exempt, so they would be called exempt supplies. And again, there's a list online, so if someone wants to research further, they can find some of these exemptions, if you will, on the Canadian government websites, as well as there is certain things that would be what's called zero-rated supplies. They're mainly exports, so you wouldn't be subject to them if you're shopping in Canada for goods or services. But if you're a Canadian exporter, you can actually sell a service or a product from Canada to another country, and zero HST or GST HST rate would apply.
Mm-hmm.
Yeah.
Okay. So actually, for tourists, I have one last question, and it's very taboo question about the bank account. Most of them plan their future for their kids or for themselves, mm-hmm. and they consider to open up a bank account just for the future references, not for today's life. Mm-hmm. My experience living in Canada tells me that a bank like RBC is great for corporations, but when it comes to personal banking, it's not a number one in my opinion. So I would consider like CIBC and TD for it, and would go far away from Bank of Montreal, but that's just my, without any facts, theory. So I was hoping to listen to your experience and thoughts on it.
Yes. Again, I think in Canada there's 5 large banks, being RBC, TD, CIBC, Scotiabank, and BMO, or Bank of Montreal. Those are the main 5 Canadian chartered banks in Canada. They all do personal banking. They all do business banking. I would say that in my experience, much like what you mentioned, RBC and TD are the largest business banks, in my opinion, for most of my in my practice for much of my clients. Not to say that that other businesses do not use other banks, but by far and away, they use them less. Myself also, I had some good experiences with CIBC on the mortgage lending side, so I can recommend that for some new Canadians that are looking for a mortgage. I believe, but again, mortgages are done by all banks. I don't want to exclude any other banks, but definitely I would say RBC and TD are the largest banks by far for all things, not just business, not just mortgages, but just in generally the size of their client base, the size of assets under management. And then I would say CIBC and Scotia would be next, and then probably BMO, I think, in my opinion, is the smallest of all. But again, depends where you want to set up your relationship. And it's important to just have like a person of contact and be making sure that you're getting the best service possible, and that maybe you have a branch conveniently close to where you live or where you're staying, so that you can also, especially when you're when you're doing business banking and you need to, deposit checks, wire funds, and you need that convenience that you have a branch that's close by. But generally, all banks would deal with the same type of transactions, and they can all be used for different purposes, personal and business alike, and mortgages.
Yeah, and if you're lucky to have a good financial advisor there, or just a person to be in contact with, then that's a win-win. Well, I guess for the tourists, we're good. Thank you so much. And we'll move to the next topic.